Hi everyone! Welcome back to my channel, and in today's video, pag-usapan po natin ang recently issued Revenue Memorandum Circular by the Internal Revenue, and this pertains to the imposition of taxes on income received by social media influencers. So the subject Revenue Memorandum Circular is RMC number 97-2021 dated August 16, 2021. And according to the circular, it is effective immediately. What it means is that upon its publication in the official gazette or in a newspaper of general circulation, it becomes effective immediately. That is pursuant to the Article 2 of the New Civil Code of the Philippines. The internet as a source of income for social media influencers perhaps may be considered, as far as Philippines is concerned, as under the sector of informal economy, where there is not much regulation, at least for taxation purposes. And so the exponential growth in this industry perhaps caught the attention of the BIR, and that is the reason why this circular is issued. And also the government may have realized that this is a potential source of income, and I believe that that is perfectly within the mandate naman ng BIR to determine objects of taxation. Now, who are social media influencers as far as the Revenue Memorandum Circular is concerned? Under Section 3 of the circular, it states that the term social media influencers refer to all taxpayers, individuals or corporations receiving income in cash or in kind from any social media sites and platforms. That includes YouTube, Facebook, Instagram, TikTok, Snapchat, among others. And that is in exchange for services performed as bloggers, video bloggers or vloggers, or as an influencer in general, and from any other activities performed on such social media sites and platforms. For purposes of taxation, these individuals may either be citizen or an alien or foreigner. For citizen, they can be resident citizen or non-resident citizen. Likewise, for an alien, there can be a resident alien or a non-resident alien. These classifications are very important for purposes of taxation because, for example, if you are a resident citizen, all your income, whether that income is earned or received within the Philippines or outside the Philippines, anywhere in the world, that income is subject to tax. On the other hand, if you are a non-resident citizen or a resident alien or a non-resident alien, only your income earned or received within the Philippines are subject to tax. For corporations naman, we have this domestic corporation and resident foreign corporation. So, the same principle applies that when it comes to domestic corporation, all the income earned or received within the Philippines and all income received outside the Philippines are taxable. While for the resident foreign corporation, only their income earned or received within the Philippines are subject to tax. According to the circular, this income may either be in the form of cash or in kind. So when the income is earned in the form of in kind or goods, for example, they are to be measured or they are to be valued at fair market value. The next part of the circular is Section 4, wherein it enumerated the sources of income earned by a social media influencer, and they are: number 1, YouTube partner program; number 2, sponsored social media or social and blog posts; display advertising, becoming a brand representative or ambassador; affiliate marketing, co-creating product lines, promoting own products, photo and video sales, digital courses, subscriptions, ebooks, podcasts, and webinars. Another salient point under Section 4 of the circular is with regard to the type of taxes being imposed on the income received by social media influencers. And basically, there are two. Number 1 is income tax plus business tax. And business tax may either be in the form of a percentage tax or value-added tax. Just a quick overview of the difference between business tax and income tax. For business tax, the basis of computation is on the gross income, while for the income tax, the basis for the computation is on the net income. So I said earlier that for business tax, they can either be a percentage tax or value-added tax. So if the gross income or receipts does not exceed the VAT threshold amount of 3 million pesos, the taxpayer may elect to apply the percentage tax. But if the income exceeds the threshold of 3 million, the taxpayer is subjected to the value-added tax. Para naman sa computation ng iyong taxable income, the BIR allows a certain itemized deduction for as long as they are directly attributable to the or directly related to the production or realization of your income. And the list of those allowable deductions are provided in Section 34A to 1 of the National Internal Revenue Code or NIRC. For purposes of RMC number 97-2021 for social media influencers, the BIR gave an example of list of allowable items or expenses related to production or realization of income for YouTubers, and they are as follows. Number 1, yung filming expenses like cameras, smartphones, microphone, and other filming equipment. Second, computer equipment, subscription and software licensing fees, internet and communication expenses, home office expenses, office supplies, business expenses like traveling or transportation related to YouTube business, depreciation expense, and bank charges and shipping fees. Again, this list of expenses may only be allowed by the BIR provided they are related to the production or realization of income and they are fully substantiated by documentations like official visits. Just like any other provision of the NIRC, Section 5 of the subject circular of the BIR allows another option for the taxpayer to claim for expenses to arrive at the taxable income, and that is through the optional standard deduction, which is equivalent to 40% of the gross receipts or income. And take note that in this option, the taxpayer is not required to substantiate those expenses. Therefore, Section 5 of the subject RMC will somehow give you an idea that as a taxpayer, you can actually reduce the amount of tax that you have to pay in the BIR legally. So, ang gagawin mo na lang, aalamin mo kung alin sa dalawang option ang sa tingin mo ay maximize mo yung amount ng deductions that you can claim so that you can reduce the amount of taxable income and therefore you can minimize the amount of tax that you have to pay with or to the BIR. Now, the next question that you might have in mind is how to comply with this recent issuance of the BIR. So, number 1 is through registration of your business with the appropriate RDO or Revenue District Office in your locality. And second is you have to keep books of accounts, and for that you need the services of a bookkeeper or an accountant, or you may do it yourself. And I have actually a video on how to record your business transactions using Google Sheets, and I have linked the video down below so that you can watch it. Now, assuming that you have already registered your business and you are already maintaining books of accounts, your next compliance step is to file your tax returns and actually pay it. Under item D of section 6 of this circular, it provides also that the taxpayer or the social media influencer has an obligation to withhold taxes if applicable from the payment they made to the employees for compensation or other applicable withholding taxes. The last item under section 6 of the circular pertains to liabilities of the taxpayer in case that they fail to comply with the provisions of this circular. Now, a social media influencer receiving income from a non-resident person residing in a country with which the Philippines has a tax treaty must inform the latter that he or she is a resident of the Philippines and is therefore entitled to claim treaty benefits provided under the relevant tax treaty. Ngayon, importante po ito that the taxpayer secures or obtain a tax residency certificate or TRC from the International Tax Affairs Division of the BIR. Importante po ito because it will allow the taxpayer to pay a lesser amount of tax by virtue of the tax treaty between the Philippines and a certain foreign country. Otherwise, pag hindi ito inavail ng taxpayer at hindi siya nag-present ng TRC doon sa foreign country where the Philippines has a tax treaty with, the taxpayer will not be allowed to claim foreign tax credits in excess of the appropriate amount of tax that is supposed to be paid in the source state had the income recipient invoked the provisions of the treaty. A detailed guidelines on this is found in Section 5 of the Revenue Memorandum Order number 43-2020, which I have linked down below so you can readily download. And speaking of foreign tax credits, a Filipino citizen who earns or receives income from foreign countries and where that income was subjected to tax by said foreign countries, the taxpayer is allowed under the law to claim foreign tax credits. And as to what extent or amount that such taxpayer may claim would depend again on whether there's a tax treaty between the Philippines and a particular foreign country, and whether the taxpayer is able to inform that foreign country that he or she is a citizen of the Philippines through presentation of the tax residency certificate. And by the way, please note that an alien individual and a foreign corporation shall not be allowed the tax credits against the tax for the taxes of foreign countries, because again, as I have mentioned earlier, only income within the Philippines of an alien or a foreign corporation is subjected to tax. So their income earned or received outside the Philippines are not subjected to tax by the BIR. For purposes of illustration, let us assume that Juan de la Cruz is a Filipino social media influencer residing in the Philippines, and in 2020, he received an amount of 200,000 pesos or 10 million pesos from YouTube. Now, under the US tax law, payments from YouTube through YouTube Partner Program are considered royalties, which are generally subject to tax at 24%. Another information is, under Article 13(2)(a) of the Philippine-US Tax Treaty, royalties derived by a resident of the Philippines may be taxable in the US, but such tax shall not exceed 15% of the gross amount of royalties. Lastly, when she filed her tax return, she claimed 1 million pesos as deductions and opted to avail of tax credits for taxes paid in the US. Now, for scenario 1, let us assume that Juan de la Cruz does not inform the US that he is a resident of the Philippines. In other words, Juan de la Cruz did not avail of the 15% tax rate that would have been applied had he invoked the tax treaty between the Philippines and the US. So if that is the case, Juan de la Cruz would have to pay the amount of 2.4 million pesos or 24% of the 10 million pesos to the Internal Revenue Service in the US, since he did not avail of the tax treaty benefits. Whereas the amount would have been different, or in fact would have been lower, had Juan de la Cruz invoked the tax treaty benefits. So in scenario 2, assuming that Juan de la Cruz informed the US that he is a resident citizen of the Philippines and in fact presented the tax residency certificate or TRC, the amount that he would have to pay to the RIS would have been lower than 24%, and that is 15% under the US-Philippine tax treaty. So the amount that equivalent of that is only 1.5% or 1.5 million of the 10 billion pesos. Now, with respect to the claim for foreign tax credit, no, the rule is where a treaty exists between the source state and the Philippines, but the taxpayer fails to invoke the provisions of that treaty, the tax credit that may be claimed by the taxpayer shall be limited only to the tax that should have been paid by the taxpayer had he or she claimed the benefits under the said treaty. So under scenario 1, where Juan de la Cruz did not inform or did not avail of the tax treaty, the amount that he can only claim as foreign tax credit is up to the amount of 1.5 million pesos or 15%, which is the rate that should have been applied had he invoked the tax treaty benefits. And under scenario 2, where Juan de la Cruz in fact avail of the tax treaty benefits, the amount that he could have claimed as foreign tax credit is up to, again, 15%, which is the applicable tax rate under the US-Philippine tax treaty. So 1.5 million pesos yung pwede niyang i-claim as foreign tax credit. So mapapansin natin, walang difference kung nag-inform siya or hindi siya nag-inform with respect to the amount of the foreign tax credit. So whether or not Juan de la Cruz claimed tax treaty benefit, he still has to declare in his income tax return the royalties earned from the YouTube and pay the remaining income tax due net of allowable tax credit as computed below. So, gross income 10 million pesos less allowable deductions of 1 million pesos, the taxable income is 9 million pesos. So, using the tabular schedule of computing tax due, the total tax due before the allowable foreign tax credit is 2.7 million pesos. So, less the foreign tax credit of 1,500,000 pesos. So the amount of tax still due and payable by Juan de la Cruz to the Bureau of Internal Revenue is 1,260,000 pesos. Now the total amount of taxes paid by Juan de la Cruz in the Philippines, to the Bureau of Internal Revenue, plus the tax paid to the Internal Revenue Service of the US is 3,660,000 pesos. Assuming of course that Juan de la Cruz did not avail of the tax treaty benefits. But if Juan de la Cruz avail of the tax treaty benefits, the amount that he would have to pay in total both to the BIR in the Philippines and IRS in the US is only 2,760,000 pesos. So much lower.